Welcome to TradeTheMBI.com. This is John. This report is for the first and the last month, end of, the final day. There really wasn't a whole lot of movement. In fact, it was just a real slow draw. And then we had a short signal that came in on the 5K chart, but it took most of the day. And then finally there was a quick little dip. But from a daily standpoint, you can see irrelevant to the general direction of things, still strong from a bullish standpoint, though already we can see getting back to overbought. Of course, you had the speech from the president last night. The impact of that was just about to determine whether or not the consistency of this road upward is justifiable or if there's backtracking. And I think that was really what the market was looking for, that is the push still there. And clearly they believe that the push is there because the euro has taken a bit of a pounding, which meant that investors like what they heard, simply because it's an indication that there's going to be growth in the US that's going to attract dollars, which means people will sell euros. Though eventually it should actually benefit the EU. The expanded trade always lifts all the boats. But see, again, this was where we get into that time lag issue. We had the GDP numbers were incredibly weak, no growth, again, 1.9%. That's like, and then when you're handling the deficits you really had negative growth again. People don't take that into account when you have deficit spending. That money that you're using to float the economy isn't real, it's borrowed. Bonds, I don't know why they're holding up as well as they have been, but there's still that pressure that will the Fed even be able to do anything is really the problem. I mean, they keep promising, but they did that for a decade and people bought into it. I think they're still hamstrung. I think we're caught in this range temporarily until the economy actually starts to move, in which case they'll have no choice. The market itself will force the move. Again, oil, like I said, they're holding it in this range, and that's pretty much just a supply and demand range. At this particular point, there really isn't any impetus. I mean, we've seen it anytime there is any reduction in inventories, it gets filled in within the next month because the spigot can just be turned on and off in America. It's just a phenomenal thing. Who knows? Could have, should have been done decades ago. Could have saved us a lot of inflation and heartache economically. And gold is still going to be favored. I don't see any difficulties with gold. We had some positive extremes, needed a little bit of retracing. Nothing get excited about at this particular. So we saw futures shoot up the speech. It's filling back in there. I mean, that got overbought pretty much immediately. But again, pivot range 2360. That's where it's at. So here was the short signal that came in slightly above. All we did was move back to the line, got right back below it, and shakeout improved, and then boom, started to take off. Fairly decent. We just got a DOC spread coming in here right at this particular peak point, but the shakeout is still high enough that unlikely that we're about to see it. Some of these are not going to be appearing in the adjustments that I'm just about to make, simply because even a DOC spread like this with the rising Azure line in that, a little premature to take those, because normally when that begins, any little dip is short-lived, and you can see the same thing happen right here, and it progresses to the upside from there. So those are some of the little things I was working on during the slow action, and there was a very small day of action trade there. I mean, it was still a decent enough dip. We went from 66 range all the way down to the 58, so a little 8-point move, which is not really a lot by historical standards given where we're at 23, 60. It's pretty low volatility, and that's going to have to change soon. Simply it's a matter of function. The market is going to require a little bit more volatility. Though I will say in the 90s rallies, you had very small ranges as well that just kept slowly eking up a little bit at a time, a little bit at a time, a little bit at a time. So I think there's a lot more dramatic news out there that's going to impact the market, and seeing real things happen certainly is going to be more of an effect. You can only go so long in a euphoric stage before you actually have to produce some results. So that's where we'll be looking to next. But for now, you just got to go with what is. And right now, it's a continuation of the rally. Now, again, well, at the end of the week and the beginning of next week, we're going to start to see inflows from the 401ks in that, which if we're holding above this 2360, I would look for a big push like we saw in the previous month. So keep that one in mind. As always, trade well. We'll talk again later.